So welcome to our annual Christmas gifts episode. For those that are new to Investing Compass, we usually gift each other something and then we go through good gifts that you can give an investor in your life.
Okay. And what we do is we come up with a theme. So we've done this
3 years now?
Yeah, I don't know. It's been a while. So we come up with a theme. And last year we just started with video.
Yes.
And so the theme was something you can wear. Now I am wearing
your Christmas
gift from last year. So for people on audio, it's like a collage of pictures of Warren Buffett. And then Shani came up with a saying.
Always be compounding,
Always
ABC.
be compounding. Yeah, exactly.
I designed it myself.
It's pretty
apparent
for anyone that anyone can see this. So what, talk about this year. You decide the theme this year.
We decided together this year. We have decided that we're going to gift each other something book related. And that's because we've written a book.
Yes, a great Christmas gift for everyone.
Yeah, yes. So it's scenes on theme. So we set a budget of $150, which is triple last year's budget. But Mark never sticks to the limit anyway.
All right, who goes first?
I'll go first.
Okay, can I describe it a little? Well, you can open your card.
Okay. This is not my gift.
Well, yeah, it is, but I also want to describe why you are getting...
This is so sweet.
Yeah, I'm a nice guy. So Shani's had a very big year. You got promoted at the beginning of the year. You were named an Australian Shareholders Association Education Partner. You are you're on the board for Forbes Advisor. You have been teaching these financial literacy courses. You're going to New South Wales Parliament, and you are talking about financial literacy at New South Wales Parliament. So a lot of stuff going on, and of course the book. And one of the things about Shani that people don't know is you are a very giving person, and you do all this work for other people, and you'll do all sorts of things for other people. And you wrote about it in the book that you won't ever get yourself anything. So I wanted to get you something because this has been a stressful year, something that's relaxing for you. And so I booked you.
This is very loose on the theme, Mark.
Anyway, I booked you something called the Volcanic Spa something. I think they put rocks on you or something.
Oh, that's very nice.
I have all the details. You'll get the gift certificate tomorrow morning because you can't set a time. They just say, we'll send it in the morning and you pick a day. So I picked tomorrow.
Thank you. That's so nice, Mark.
All right. So now it's my turn.
It is.
Do you want me to open the card first?
Yeah, go for it. It's
I'm not a child, right? Shani's very worried that I'm not going to understand the gift. Looking forward to continuing it in 2026. Merry Christmas. Your friend, Shani.
That's the gift.
Your friendship?
Yes.
Wow. Where can I return that? Okay. So now you're nervous, right?
Yeah. I mean...
I think it's a book. I'm going to go out on a limb here. I'm also struggling to open it. A Movable Feast.
Yes.
So this is my favorite book. And it looks old. Is there something you would like to describe about it?
Well, it's the first edition.
That is amazing. Thank you. Where did you find this?
It took a bit.
Well, that is very sweet. Why don't you think I'm going to understand it?
No, I just didn't know. I just bought you the same book that you have at home. I don't know.
No. Oh, because I'm so old.
No.
That I was around with the first edition. That is very sweet. So anyone who hasn't read A Movable Feast, it is Hemingway looking back on his first days in Paris. So it was written when he was older. And there's some nostalgia involved, but it's an incredible book. And it makes you, well, maybe not if you're my age, but if you're young, makes you want to move to Paris, which now, of course, is more expensive than it was in the 20s. Yes. But move to Paris and become an author. So thank you, Shani.
No worries.
So we need to get into the rest of the episode. So as you said, we are going to try to give Christmas gifts to people that are listening or watching this. And so obviously this is an investing-based podcast. So one, we would ask everyone to consider giving Invest Your Way, our book. away to somebody you love or hate, depending upon what you think about the book. But yeah, that's our first suggestion.
Yes, that's our gift of choice. But let's go on with a few more. The first are books that we enjoyed reading this year. And we can start with one that we both liked, which was Same as Ever by Morgan Housel.
And I wrote an article on one of the lessons I took from this book, and that was the unappreciated benefits of cash.
But the book really focuses on things that don't change, and this book is really filled with lessons for investors. And he really drills into the theme of timelessness, and it's that markets, technologies, and fashions may constantly change, but human nature doesn't.
Yeah, and I think that's really the message, right? Look at those things that don't change instead of just chasing trends. So try to figure out the things that just will continue to endure. And I think a lot of our listeners love the behavioral finance episodes. So that is certainly something that Housel talks about a lot. So I think anyone who likes that side of investing will love the book. And I think the book has just a big focus on how investors behave and just how we're hardwired to behave in a certain way.
I think in general, we both really like Morgan Housel's books because they're sensible and he's a great writer. They're also books that aren't one and done. You can definitely go back and reread it after a few years and it will remain valuable and serve a few good reminders. So that's our first pick. For our next pick, it's a book from an accountant.
We're doing our book again since you think you're an accountant?
No, I'm a pretend one. But this one is just a quick pitch. It's a book by Adrian Raftery. He releases it every financial year based on the changing tax laws. But it's called 101 Ways to Save Money on Your Tax Legally. And every time I write an article on tax, it's very popular. So I know that people will enjoy this one.
Yeah, I don't know what people's impression is of the life that you live, but I like walk into work and there's Shani reading 101 tax tips. But I think, we talked about it. And I think for a lot of people, not every section is relevant for you. But, it's a good book to use as a reference point. Even though it does come out every year, obviously, a lot of the stuff stays the same. And just read through it and see if there's anything in there that you're actually missing that could save you some money on tax. So Adrian's picked out parts of tax law that are relevant to as many people as possible. So hopefully it will work well. And he just goes through a deep dive into each section, and it's written in a more accessible way than the HEO website. Which you should know. You're on the HEO website
all the time.
A lot. I'm going to recommend a book that I actually read. I think I read the book in January. So early in 2025. So it is called Richer, Wiser, Happier. It's by William Green. And it was actually a suggestion from a listener. So somebody emailed me and said, you'll love this book. And they were right. I did love this book. And Charlie Munger called it one of the best investment books ever. And that's a pretty good endorsement. So each chapter of the book is about a different famous investor. So it's kind of hard to come up with specific lessons because you get lessons in every single chapter that's out there. But one of the things that I liked about the book is a lot of the lessons weren't just about investing. They're also about life. And obviously people that have been very thoughtful about life and thoughtful about markets. And I think that will help anyone who reads the book do the same thing.
All right, so this has been very book heavy. So let's talk about a couple of other gifts that you can get as investors. And we always have a part in this where we talk about a few of our analysts' top picks. And we've taken a little tilt on it this year. It's talking about one of the main goals that investors have.
Yes, like me.
Yes.
For example. And this is really good timing because Morningstar just released the Australian Dividend Outlook. And that looks at sectors and stocks where our analysts see attractive dividend yields in 2026 and 2027.
But first, why don't we go through some of the key takeaways of the report? So the first is that at the time of recording in mid-October, the ASX 200 has been overvalued, translating into less attractive dividend yields than historically. 3.1% as of late August 2025, below the 10-year average of 4.4%.
But even though the overall environment isn't great from a dividend yield perspective, there are opportunities, and that's the whole point of our analyst report. So our analysts expect dividends per share to rise over the next 2 years, which is good news. So 64% of Morningstar's coverage has increasing dividends in financial year 2026 and 78% of Morningstar's coverage in financial year 2027.
7 of 11 sectors are expected to deliver higher dividend yields than the broader market's forecast of 4% average over 26-27. And that is energy leading at 5.5%, followed by utilities, 5.3%, real estate, 4.8%, and financial services, 4.7%.
Okay, let's get into the top picks now. So more than half of the list of picks from our analysts have economic moats, which is always nice. So we talk a lot about economic moats on this podcast, but moats are really important. And I've talked about this. It's really important to consider as an income investor because, of course, if they have a competitive advantage, that supports the firm's ability to maintain consistent cash flows, which then can be returned to shareholders. So no moat rated stocks may still be suitable if you look at other factors. So financial health, valuation, dividend consistency, all of those come into play. So no moat companies may be suitable if there's a reasonable level of cash flow stability and a dividend focus from management.
And over 90% of the pick list have low or medium Morningstar uncertainty ratings. And the uncertainty rating indicates our analysts' estimated range of potential outcomes for a company. So it really just reflects underlying business risks. And the lower the uncertainty rating, the less volatile we expect future cash flows to be. So the greater our analysts' confidence in projecting earnings and dividends.
All right. So with all of that out of the way, let's get into the picks. So the first is Woodside. So Woodside has a forecast yield in financial year 2026 of 7.68%. So
huge.
That's more than double the overall market yield. So we will say, of course, sometimes when you have high yields, it's because the shares have been through a bit of a rough time. Woodside certainly fits that. So they have gone down about a third since 2023. And that, of course, has significantly underperformed the broader market. And so while the oil price has fallen, our analysts believe that price reduction is unwarranted.
And the shares are near the cheapest relative to the fair value that our analysts have assigned since the tail end of the COVID bear market. And that's at the middle of October when we're recording this.
And I think there's a narrative out there that hydrocarbons are, about to stop. We're about to stop using them, but actually oil and gas demand is still growing. So predictions of a near-term peak followed by a rapid decline seem a bit premature to our analysts. And they think that there needs to be a significant investment in hydrocarbons in most demand scenarios just to backfill this naturally declining supply as we use it.
Of course, price and dividends are not the only factors that matter. It's important to understand how this stock fits into your portfolio. Okay, so let's do another from the pick list. And this one is financial services. It's ANZ. ANZ is the smallest of the wide moat major banks in Australia. And although it's not as large as its peers, it has cost advantages relative to regional banks. And this supports our analysts' expectations for above cost of equity returns over the long term.
And ANZ has been going through a period, or they resorted to discounting and cashbacks to stem the flow of lost home loan market share. But our analysts do expect investments in process and digital offerings to make the bank more competitive in the future. It has a wide moat, as Shani mentioned, meaning that our analysts believe that it's able to protect and grow its earnings over at least the next 20 years.
And ANZ's got new management and it's reviewing strategic priorities to cut costs and lower non-financial risks. And this should help drive earnings growth and return on equity. Our analysts also believe that the acquisition of Suncorp Bank will modestly improve bank efficiency, increasing its funding from low-cost transaction accounts and leveraging its investments in tech. But like with many acquisitions, its drawn-out integration and associated costs have caused ANZ to take a hit. So the positives are unlikely to be materially valuable.
And ANZ has had some regulatory issues, and they have been fined a lot. So our analysts do think that there's potential for them to modestly lower the dividend. But even if they do trim it, it still has a significantly higher yield than any of its other banking peers. So there's a forecast yield of 5.08% for the 2026 financial year.
Okay, let's do one more and we'll pick from the industrials. We've got Aurizon. Aurizon shares offer an attractive yield, and our analysts forecast yield for 2026 at 5.92%. The company has high-quality rail infrastructure and haulage operations, and Morningstar's analysis has considerable downside risk priced into the share, and the analysis suggests the risks for investors are skewed to the upside.
And they have had some lower volumes due to two things. So low coal prices and high royalties charged by the Queensland government. And this downturn has extended longer than we thought because of wet weather in prior years. But we are expecting growing demand from India and Asia for Aussie coal, and that will help prices. It will increase volumes, and we expect that to happen over the medium term.
And earnings should also benefit from CPI-linked tariffs, as well as recent developments and acquisitions. So our analysts believe that environmental concerns are overblown, and this gives investors an opportunity to get in to an above-average company at a decent discount.
Yeah, and Aurizon largely hauls coking coal, and it comes from these globally competitive mines up in Queensland. And at this point, our analysts just don't see a commercially viable alternative to coking coal to make steel. And so we think for a long time, there will still be demand.
So there's 3 quick stock pitches from our Dividend Outlook pick list from Morningstar Equity Analysts.
All right. So it's been a big year for us, Shani. So we obviously published a book that we talked about, and we do really, really appreciate the support that we've received from everybody. I think, we both do this, Shani, because we're hoping that we can make some sort of difference in people's lives, help people achieve their goals. And we want to make sure that everything we put out at Morningstar from the two of us is free and accessible. And the podcast, of course, is one way that we love to do that. And, I feel like we formed a connection with a lot of listeners. A lot of people email me. We've been doing this for 5 years now, which is a lot. It just means a lot from both of us for all the support we've received from people.
Yeah, definitely agree. We couldn't do it without you guys. And the only goal we have is hoping that we're able to help someone make a better decision. And we're very lucky that we're able to do that with Morningstar support and with independence, making sure that everything that we say is in your best interests and not anyone else's. And we also couldn't do it without Will. Will is the only reason this stuff is as polished as it is, and he is truly the best in the business. We're lucky to work with him, and he's also had a big year. He got married and he's about to head off on a very long honeymoon.
Yes, and we have a gift for Will. Now, Will, you were off camera. So, opening it's not that exciting. I'm just going to pull it out of the bag. But this is actually related to your wedding, which, of course, Shani skipped. But since you ruined my Sunday by putting this on every table, we got you a bottle of Hennessy so that maybe you some point can ruin one of your days after drinking the whole bottle. But big thank you. Yeah, thank you very much, Will. We really appreciate it. Thank you, Shani, and thank you everyone who's listening and watching.
This video has been prepared for clients of Morningstar Australasia Pty Ltd and or New Zealand wholesale clients of Morningstar Research Ltd. Any general advice has been provided without reference to your financial objectives, situation or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest. To obtain advice for your own situation, contact a financial advisor.